Welcome to the Research at Citi podcast. I'm your host, Poon Werkun, Head of Research for JANA and Asia South here at Citi. The evolving AI trade remains the most powerful thematic in global markets. While the initial broad enthusiasm has given way to more selective performance, the AI thematic is resilient and resurgent. AI continues to be a powerful driver of truly exceptional earnings growth, particularly for the enabler cohort in the semiconductor space. This is why we see the year-to-date outperformance in the Taiwan and Korea stock market, which are central to this ecosystem. Today, I'm delighted to have Laura Chen, Head of Taiwan Research, and Peter Lee, our Head of Korea Research, to join this discussion. Laura and Peter, welcome to the show.
Hey,
Hi,
thank
thank
you, Erica.
you. Thank you, Erica, for having us.
Great. So let me first turn to Laura with my first few questions. So Laura, the Taiwan market and the tech sector have been big beneficiaries of AI spend. Do you think this is sustainable? And other than the semiconductor space, are there other companies in Taiwan that are critical roles to play in the AI infrastructure build out?
Yes, I think, that's true. What we see is that year-to-date Taiwan stock markets has rallied for more than 50% and becoming the fifth largest stock market globally. It's all thanks to the AI infrastructure build-up, not just the semiconductor space. If you look at the upcoming Computex next week, which will be the biggest event in the technology sectors in Taiwan, we will see that actually, aside from the GPU, the CPUs, we'll see various different type of the technology demonstrate during the trade show, because we now see that AI now is not just about the semiconductors. It will be more structured to relate to the networkings and also the power systems. So in Taiwan, other than TSMC, which investor probably more familiar with. Actually, we see that broader than the semiconductor space, including the rack assemblies and also the power deliveries, thermal management, and the networking space, as well as like a PCB substrates, all of are very important to build up the full infrastructure for these hyperscalers like Microsoft, Google, Amazon, Meta, etc. And we do think that it's a structured trend, as we see that for hyperscaler, they continue to see very strong demand on their capex build up. For our city's views, we expect the growth will be 46% CAGR, and the overall capex will continue to grow. So we think even though we have been talking about the AI's trends for maybe 3-4 years, because a lot of demand not really be able to fulfill. And for the semiconductors and the various components in the supply chain, their capacity build up take time. So we believe that we still see quite decent earnings growth and also the decent industry outlook for the following 2-3 years.
Great, Laura. So it looks like this boom market could be a multi-year phenomenon and could be quite a broad-based scenario, which is very exciting for Taiwan. I wanted just to check with you, what can drive further earnings upside to the Taiwan technology sector? You mentioned about capex build out, but what about ASP hikes? What about utilization? And also within the advanced nodes, where do you expect the highest demand? And is it going to the highest technology or the newest technology? And where's that demand coming from?
Yeah, that's actually a very great question. We also get a lot of similar question from investor quite often. I think there are several layers here, and some of may still be underappreciated at some point. On the ASP trend perspective, because we see that the chips continue to migrate to more advanced node. For example, in the previous generation, like a Hopper from NVIDIA or the Blackwell still ongoing, it's all based on 4 nanometers. And for like the AI accelerator is the first year moved to N3, the 3 nanometer as well. So from the technologies migration perspective, we see that the ASP migration as well, more upside. And also because of the supply is limited from the most advanced node technology at TSMC, and also for the iteration rate now is quite high. It's not just for TSMC. We also see that the similar scenario happening across the board, other supply chain like substrate, for example, like raw materials in tea glass, and also packaging as well. So I think the ASP upward trend is happening. And the plus, we see that it's not just like a chips migration for every generation's AI development. We see that the power consumption is also increasing. Thermal requirement is more advanced. So that all drive to higher ASP upgrade. Like we just discussed, companies are trying very hard to build up capacity, but since the demand is much stronger than expected. So aside from this technology migration, we do see like-to-like ASP increase. So that will all drive probably the earnings upside to the supply chain companies.
Thanks, Laura. It does sound like that there are some bottlenecks for both the capacity and also in terms of the power consumption. Wanted just to talk to you about, so, Taiwan versus global peers, right? So if we think about the competitive landscape, could you walk us through? Because we also understand that some of the Taiwanese companies do have overseas expansion plan. So how does that affect longer term profitability?
Yeah, of course. Given the strong demand, I think everyone expanding the capacity and also consider the diversification of geopolitics potential risk. I think every supply chain makers, they want to have more diversification for their production base. That's why we see that for TSMC, for example, they are trying to build up more capacity in Arizona in the United States and also Kumamoto in Japan. At the same time, we are seeing that the downstream makers like Honghai Foxconn, and also Quanta, Wistron, everyone is moving to closer to the United States or Mexico, for example. So we believe that diversification is ongoing, and that's probably will also lead some like execution risk, that's for sure, and also the potential dilution for the profitability. But the thing is, I think very different from the previous cycle is that when we look at the AI supply chain, because the real buyer, they are the hyperscaler, they are less cost or pricing sensitive, and they have a much longer product cycle and the order visibility. So they are more willing to pay at the premium, even that these overseas capacity may lead to higher cost. That's very different from the consumer electronics, which that would be much more pricing sensitive. But for the AI infrastructure build up, it's actually more like enterprise spending, more like a capex. So from the real buyer, which is those leading CSP, they are less pricing sensitive. Of course, I think they may also try to diversify to non-Taiwanese companies. For example, in the foundry space, we see that many of TSMC's customers, they may try to work with Intel or Samsung, for example. But I think like TSMC's CEO previous mentioned that there's no shortcut, and the capacity build up takes at least 2-3 years. And once you have the capacity build up, it takes probably another 1 year to really run up your year rate in big scale. So I think because the AI product cycle, you need to like lockdowns in 2-3 years ahead and to work with the supply chains on very complex system design, not just a single chips design, but also the full system design. So at least for like a 2-3 years perspective, we don't really see that much landscape change.
Understand. Thanks, Laura. And we talked a lot about AI supply chain. Other than the AI supply chain, what are the Taiwanese companies' progress in other technologies such as robotics or space exploration supply chain?
Yeah, actually, I mean, for like robotics, we do see that a lot of humanoids in China, but here in Taiwan, I think we probably more tied with those like industrial application. For example, like a robotic, Honghai has been very vocal about their ambitions here. They've been invested in the AIs in various different applications across the different industry. So the robotic opportunities here in Taiwan probably will be more like tied with the manufacturing process, which is also Taiwanese companies good at. Not necessarily to be like a humanoid that type of robotic, but more like robotics arms to enhance your overall manufacturing efficiency. NVIDIA is pushing very hard on that. So we see a lot of supply chains makers in the tech space. They work very closely with NVIDIA to pushing into so-called physical AI and robotics. Like Honghai Foxconn is one example. And actually for TSMC, they also build up that so-called digital twin systems for their manufacturing process. So I think there's a lot of different kind of applications to use AI in various perspectives. But for Taiwanese companies, while we see that the robotics or the new technologies, they are more tied with their expertise in the manufacturing process angle.
Laura, thank you so much. Very insightful. Let me now turn to Peter. Hey, Peter, the South Korean market has been performing quite well recently. Can you talk about some of the key factors behind this very strong momentum?
Yes, sure, Erica. Actually, there are two, I think, main drivers. The most, significant is the dramatic, turnaround in the earnings of the Korea major memory makers as the memory market enters new boom cycle thanks to AI. So their improved performances are lifting the entire market. And additionally, the government's, Korean government's, corporate value program, which encouraged companies to improve the shareholder returns, and then corporate governance is also having a positive impact on the investment sentiment. So two drive actually that earnings improvement and also the government driven corporate value program. Yeah.
Yes, I mean, you mentioned about the memory market certainly is booming, and this is largely tied to the AI development. Can you give us some sort of technical explanation of the core driver, the KV cache, and why that is so crucial?
Yes, sure. Actually, this boom is fueled by the massive demand from AI, especially for the AI inference actually. So the key driver is the key value cache, as you mentioned, and think of it as an AI model, short-term memory. And when a large language model is generating response, it's through the computational results of the text. It has already proceeded in this cache. So this prevents it from having to recalculate everything from scratch for each new word, making the process much more efficient. But the problem is that you use AI more and more, it generates more KV cache. So the size of these KV cache needs to increase, which directly drives up the demand of the high capacity, high speed memory like DRAM and NAND. So that's the main driver for the memory upturn now.
Sounds to me a virtuous cycle where demand for memory will continue to go up. And given this AI-driven demand, Peter, where are we? I'm sure this is a lot of people ask you the same question. Where are we in the current memory cycle? And what's the basis for predicting how long it may last?
This very important question, and then there are key debates now in the market. Maybe if we use a kind of baseball analogy, we are only in the second inning of the nine-inning cycle game. We believe this cycle has the potential to last for another 7 years. And then the reasoning comes from the historical, the precedent. We saw the similar, super cycle in NAND market between the year 2001 to 7. And what was driven by the technology shift, MP3 player replacing Walkmans and digital camera replacing film cameras. And then we see that this create a massive new wave of demand time. Today, the AI is transformative force because AI is being adopted across both B2C and also B2B applications. So it's creating a deep and sustained demand for both DRAM and NAND, suggesting the similarly the long and powerful cycle.
Got it, Peter. I can tell that you have a pretty optimistic view considering this is early innings, in the cycle. Perhaps we can talk about some of the potential downside risks that you think investors should be aware of.
Yes, sure. I think that maybe three things that we need to be cautious. Maybe the firstly, the slowdown in a traditional IT demand. I think that the PC and smartphone demand actually could be some downside risk because that the overall the memory price will go up, then I think there could be some risk to the PC and smartphone demand weakness. But we think that strong AI inference demand will offset the weak PC and smartphone demand. But anyway, there could be some downside risk. And secondly, the geopolitical instability. The semiconductor industry supply chain is globally interconnected and then concentrated in specific regions. So any trade disputes or tariffs, political tension could impact production and demand too. So there could be another downside risk. And lastly, the slower than expected AI adoption curve, maybe that the entire super cycle thesis depend on the continued exponential growth of AI. So if enterprise adoption slows due to the high cost, lack of clear ROI, or implementation challenges, maybe then that kind of projected demand for memory might not fully materialize. So maybe there could be the downside risk to watch on that. Yeah.
Thanks, Peter. Thanks for reminding us that there could be not just up, but up and downs during these strong cycles. And anyways, very exciting time for both the Korea and Taiwan markets. So today, thank you so much, Laura and Peter, for joining me.
Thank you, Erica. Thank you, Peter.
Thank you.
This episode of Research at Citi was recorded on Tuesday, May 26th, 2026. I'm your host, Erica Poon Werkun. If you appreciate this content, please feel free to share and explore our library of previous podcast episodes, all of which are available on this channel and other channels. Also, be on the lookout for our Research at Citi Markets Edition podcast, which provides a 10-minute breakdown of the equity and global macro markets each and every week. Until next time, thanks for listening.
This podcast contains thematic content and is not intended to be investment research, nor does it constitute financial, economic, legal, tax, or accounting advice. This podcast is provided for information purposes only and does not constitute an offer or solicitation to purchase or sell any financial instruments. The contents of this podcast are not based on your individual circumstances and should not be relied upon as an assessment of suitability for you of a particular product, security, or transaction. The information in this podcast is based on generally available information, and although obtained from sources believed by Citi to be reliable, its accuracy and completeness are not guaranteed. Past performance is not a guarantee or indication of future results. This podcast may not be copied or distributed, in whole or in part, without the express written consent of Citi. Copyright 2026 Citigroup Global Markets, Inc. Member SIPC. All rights reserved. Citi and Citi and Arc Design are trademarks and service marks of Citigroup Inc. or its affiliates and are used and registered throughout the world.